Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Great to be with you guys. Today is Tuesday, September 27th. Got a lot to cover. Yikes on the euro, says Eileen. Yes, I'll be looking at that very closely. Adam, great to see you in the room. D, great to have you back. Pete, Matt, Medad, Kelly, great to have you all with us this morning. So, we're still pretty light on event risk, but I do want to highlight some major Fed speakers over the next couple of days is going to be sort of the main highlight. This is a list, by the way, feel free to take a snapshot if you'd like, of the upcoming central bank speakers. So you have Hansen on tap, you have Deputy for BOE, Draghi obviously will be on tap tomorrow, you have Bullard, Evans, Mester, George also all on tap tomorrow. And this is going to be important because it's the first time we're going to get a look from individual commentary post the FOMC hold that we saw last week. Obviously holding rates, lowering their interest rate forecast, and I'm sure they're going to be pressed on some of these issues. So keep that in mind. That's really the main event risk I'll be looking for. Heading into Wednesday, tomorrow, you do get durable goods in the United States, but more importantly, it's going to be that Thursday read on the final revision for second quarter GDP. And then on Friday, you get GDP figures from the UK as well as Canada. So keep those in mind as far as upcoming event risk for some of the crosses that we've been following. I see some questions here from Sushil on pound yen and pound dollar. Sure, I have pound dollar on the list. Let me add pound yen. All right. Okay, markets are on the move, so I kind of want to jump into price action as soon as possible. Bring your attention real quick before we jump in. Here's the dollar index. No change there. Near-term support still 11,915. Key near-term resistance still 12,018, 12,014. And we're really just looking for a break of the initial weekly opening range to get this thing going. Momentum is really flat here, not very helpful. Looking at the near-term chart and what we did in price action last week gives us near-term resistance right around here for the index. So on a rally to test the weekly opening range high, maybe on a spike, you'd look for some resistance near that 11,960 region. Okay. So just keep that in mind as far as the index is concerned. I'm going to start tracking. I've gotten a lot of questions from you guys on the ICE dollar index, also known as the DXY. I'm going to start tracking this a little more closely, just because we do have a lot of international clients that are trading futures, and there's been a couple of requests for it. So I am going to continue to start tracking this as well. It gives us a little bit different of a picture, and I do want to note that it's very heavily weighted, the euro. It's a basket of 6 currencies, but the daily chart still has us broadly within that near-term consolidation that we're seeing in the dollar index from the Dow Jones FXCM side. So we're still within the within the monthly opening range. Near-term resistance, key near-term resistance here is still going to be right at the monthly open, which converges on the 200-day moving average up here. All right, and that's sort of very similar to what we're looking at on the Dow Jones FXCM dollar index with the monthly open here and the 200-day moving average. So similar type of scenario as far as the consolidation, trading within the monthly opening range, broadly still looking for a move lower in the dollar. All right, any questions on the dollar index? All right, that's number one. Let's go through yesterday's setups. We had euro dollar, pound dollar, Kiwi dollar, got stopped out of a short on that side. I know the swing side of trades were as well. So we'll take a close look at that. We'll update you on the Sunday's report with regards to euro Oz, dollar yen. And then I do want to take a quick look at the Aussie dollar. I think it's set a pretty decent weekly opening range. We'll be looking for that break, as well as pound Oz, which I was on the long side yesterday, made some nice pips on that. And here we are right back at the lows, so we might have another opportunity to scalp that once again. Let's jump right in. Euro dollar looks like this. The premise of the update from last night with regards to euro was the fact that we were coming into that basic trendline resistance dating back to the highs that we made, I think it was for August. I'm sorry. No, I'm sorry, May. So here's the May trend line resistance, tagged off also the high that we made in August. You can see it capped the high here and literally that advance that we made yesterday spiked right into that region and closed below where? The monthly high day close. That's bearish. Okay, that's near-term bearish, end of conversation. So right off the bat, I said, we're looking to fade this rally. And near term, we're looking for a drop towards this region where I would be interested in some long exposure or long triggers. We're now probing below this. So keep the powder dry here as we head into the U.S. session. I do want to see how it's going to react. If we do continue to trade lower into the U.S. Open, I'd be looking for support along the lower parallel here. Here's what the near-term picture looks like for euro dollar. Okay, so we did come right off. It came right into that target. In fact, right ahead of the webinar, it was sitting right into this key range, swing high from last week's opening range high, and a basic 38.2 retracement. Okay, so we're going to go ahead and drop that 38.2 at this point. We're going to bring near-term resistance down to the level we just kind of cleared. And you're basically risking a move lower down towards 111.80 and this lower parallel. The reason that we will tend to rely on this parallel, guys, is because you want to see what price action is doing. So you might be thinking to yourself, Mike, why should we put so much emphasis on this parallel? We broke through the highs twice. That's true. But guess what? If you take a sliding parallel of those two highs, it's still the same slope. If you take another sliding parallel from these two highs and just match them up to the lows we made here, keeping in mind this is a 2-hour chart, you could see still the same slope. So long story short, I would like to stay constructive while above this region. As far as the short bias we noted yesterday, I wouldn't be looking to initiate any near-term shorts from here. This does break the initial weekly open. So before I get aggressive on this, I would want to see if this comes back here and fails as resistance and then starts to move off. That being said, if we continue to drift lower into the U.S. Open, don't go chasing this thing. I'd be looking for support, somewhere near the lower parallel. In fact, if we bring up the 50 line, just to give ourselves some reference, that comes in right ahead of that 618 retracement. So 111.82, 111.86, this region here could also be an area of which we could find some near-term resistance, or support rather. All right, so that's sort of my thought process here moving forward for the euro. Came off some nice resistance here. So let this thing correct a little bit lower. If it does rally again and fail, look for that stretch back into the lower parallel. Bullish invalidation for the broader trade, I'll leave down here. Okay, so that's basically a break below 1150. If we move sub 1150, which is also the exact monthly open, 1156, you're going to want to just completely let go of this long euro bias, and I think you see a lot deeper correction down towards 1080 at that point. So that might be a short play there if that breaks. Questions on euro? What it looks like on the 1 hour. All right, so moving along. If there are no other questions here on the euro, we'll move right into the British pound. That was number 2. Here's pound, number 3. And here's what the sterling looks like. So, this thing is basically just testing a major key term support, and that's the same support level that we've been talking about for a while. It's basically the low day close. Here's what the daily chart looks like. You have the low day close for the year. You have slope support, just the same slope of resistance off the highs here, extended off the lows that you made back in 2015, specifically March and April. You can see that that comes in right into that region. Basic trend line and support off the lows converges. Okay, that gives you 129.26 or so. As long as we're above that, momentum's holding 40. I can't get excited about being bearish. So I don't want to be the fool who's sitting here saying, this is the low in pound, but I do want to note that we're at support. So do I want to be on a short scalp type of bias? Not really. And I'd rather be buying dips in pound. And that's sort of the the idea that we moved with last night. So you're in the confines of this descending median line formation. There's the low day close. I don't have the slope that's on the daily chart, so keep that in mind, this trend line support right here. Actually, I can probably add that to make things clear. There it is. So you can see again, you can envision a scenario where actually this tagged really nice confluence here, where you still have to see a little mutter of a higher. Now the sort of level to beat, as it were, to really clear the way for a bigger advance here is 130.38, 130.40. Basically this trend line off the highs, a basic 236 retracement of the decline, and that would sort of open up a region towards 130, 136, and this is sort of the pivot that will open up a reversal in pound dollar if this thing is going to move higher. You got the monthly open right there, the former 100% extension, the swing lows at 38.2, big region. So two areas of interest for the top side if the weekly opening range finally gives way here, 130.40 and 130.116 into 131.35. Now, if it breaks the weekly opening range low, okay, you know, in my mind, that's sort of it. Okay, again, keeping in mind where you are in the daily chart, if you break the range lows for the week, you're looking at a drop into 112.70, followed quickly by 112.80, which is just the swing lows that you made there, and then 127.90, basically the 128 handle would be confluence support moving towards the latter part of the week. Keep in mind that you do get, like I said, UK GDP on tap later this week, so it's going to be something to keep in mind here for pound dollar. Sushil, I know you were looking at pound dollar. Questions on pound? Now, I guess while we're here, I'll take a quick look at pound yen for you. Here's what pound yen looks like. There we go. It's number 4. So pound yen, very similarly, is testing a pretty critical level. The low day close for this year is now resistance. That's right here at 131. So keep in mind, pound dollar sitting on the low day close. Pound yen is using the low day close as resistance. And then you have support at a basic trend line extending off the lows of the year. Okay, and that's basically just beyond the lows that we've just made. So for me, on pound yen, look, it's put in a pretty clear and well-defined weekly opening range. And as you get closer to that weekly opening range converging on this former lower parallel support, that adds further validation. Okay, if you see a break above 131.30 here, you'd be looking for a reversal type of bias. But until that gives way, you know, I can't really encourage you guys to be trying to call lows on these declines. It's a descending or a down trend at support. So are we looking for exhaustion? Yes. Do we have confirmation of it? No. We would need to see some price action clearing at least these initial weekly range highs. So, Sushil, hope that helps. And again, I don't want to throw you off too much, but I am looking for broadly pound strength. And we're at support at a lot of these crosses. How much might the stronger dollar affect the pound, says Eileen. So if the, I mean, I'm not sure what you mean by that, Eileen. So if the dollar rallies, pound is gonna move lower, right? But I don't want to necessarily move with that premise. If you're looking at the index right here, I think the index could rally here just on account of what we're seeing in Aussie, what we're seeing in Euro. Doesn't necessarily mean pound needs to break the lows. Okay, try not to work in such static environments like that in your head. There's going to be times where pound dollar could rally alongside the dollar index. So I don't want to necessarily equate that like that. Even if the index rebounds a little, I still am looking for pound support. And keep in mind, like I said, at the end of the day, you know, we're watching the levels. That's what matters. And if this gives out, you know, on a daily type of objective, on a longer term, medium term swing trade, you'd be looking for a drop possibly as low as 125.90 is the next key level I have on a daily sort of premise if we break these lows here in pound yen. All right, so Sushil, hope that helps. The one I'm targeting most, and by the way, dollar yen's at support too. So I think you need to be very cautious with the yen. You do have Kuroda on tap. Keep in mind, where is he? Kuroda on tap on the 29th. Okay, so early Thursday morning here in New York. He'll be making some comments, but generally speaking, it does bode well with where things are on the yen crosses to start to see some further yen weakness helping this trade out. The other one I just wanted to go over was pound Oz. That'll be number 5 here. I was in a long here yesterday for pound Oz. Kind of got shaken out a little bit early. The rally did go as high as 170.18. I got out really early, like 169.70. So, a little bit playing it cautious, close to the chest. I tend to do that a lot when we're trying to trade these turns because of the reason I just explained. It's always a fool's errand to try to take a long-term approach on a, what has been a pretty strong downtrend. Okay, so did forego some gains there, but whatever. Here's the decline again. I'm very cautiously looking for a break above the weekly open. I think for me, in my mind, that would be enough for me to get this going and start buying again. There was actually a beautiful entry if you were up during Europe on this drop here. Notice that on the daily chart, we still have been unable to close below the low day close, which comes in right here at 169.50. Okay, all of these tries for the last 3 days, spike lower, fail to close below. So this thing is a pound cross. Remember, it still could be just that breakthrough, false break scenario. And if we break the weekly open, which we failed at overnight, for me, I'd be looking for a little bit more of a stronger approach on the rebound here. And let me adjust that fib. Initial top side, you'd be looking for like a 170.90 tap here. So on an approach for a pound rally or a pound rebound, this is another pair, Sushil, I'd be looking at. I know that you're checking out pound dollar and pound yen. What could be holding pound going up, Sushil says? From a fundamental side, I really couldn't tell you. I haven't really been looking too much into the reasons from a fundy side of why pound might not be going up right now. And I don't want to look at it like that. Always look at it from a trading standpoint, from what the market's doing, right? There's just not enough bids right now getting interest for it, at least for a short exposure against the dollar. Any questions? Let's check this out real quick. Might give us a little bit better guidance using that slope right there. Adds further credence to the level we just talked about at the weekly open. And near-term support, or the next downside support, 68.45 there. So preferably looking for a breakout, zoom, retest, look for that rally towards 170.90. But unless we clear this level, be cautious here. Sushil says, thanks. Try saying that 3 times fast. You're more than welcome. Okay. Yes, that helps. I appreciate that. And sterling does its own thing, Eileen says. Correct. So I wouldn't be, that's why I'm saying I wouldn't be surprised with all these, long wicks down here. As long as we don't close below, again, just bring it into a line chart, possibility remains that this thing still could be faking people out, trying to wash out those hands before it rallies. So we'll see. This is the level to beat, though. If it gets through on the downside on a closed basis, sayonara. Okay, don't fight it. All right, so that was the pound crosses, pound dollar, pound yen, and pound Oz. Moving next into yesterday's update, I do want to cover Kiwi Dollar real quick. That's number 6. Unfortunately, did take a 20 pip stop here on Kiwi. Here's what we were looking at. If you recall the previous night, we literally said, look for a rally towards this former trendline support, now resistance. Okay, and that came in somewhere in the range of 72.70, I think was the level. Right around 72.70 was the level we were looking to get back on the short side. With bearish invalidation at trendline resistance. Okay, this was back on the 25th. Last night, we were like, okay, well, guess what? This came right back into trendline resistance. Bearish invalidation still remains with that upper parallel. Well, the thing had to make a visit of the upper parallel, okay? So while I was in a short against the highs here, an overnight trade, it came off. I went to bed pretty confident. The debate started here in the U.S. with Trump and Clinton, and all trading went out right out the window. So disappointed this morning, saw it come up to the upside here. Here's what it looks like. I guess we'll take a quick look here at the 5-minute chart, and took us right off at the highs here as we broke through. So looking at this, even on the pullback, I just wanted to note that the 5-minute chart's still finding support at 40, which means you could still see another whipsaw higher into the open of U.S. trade. So the momentum signature has not turned over, and the possibility still remains that if we hold support here at this pivot range that we've been looking at for what seems weeks now, that this thing could make another rally and give you an opportunity to get short once more against the highs. Nothing's changed as far as the levels. The bearish invalidation level remains right with that trend line, which we tagged perfectly last night. Okay, so I know I got stopped out. I know that swing trades, Jamie also got stopped out on that rally and overnight trade. But looking at this thing objectively within the confines of the last few weeks here, I don't want to get bullish yet. I'd need to see a break above this median line resistance. Okay, so if we get into the U.S. session and get another pounce higher here, look for momentum stalling, look for some divergence into these highs. I'd be interested in taking a possible short stab at this one more time against the high that we made in overnight. Questions on Kiwi? D wants to take a look at Euro Kiwi. Okay, I'm going to jot that down. We'll take a look at that once we get through. And you also want Euro Pound. Yeah, Euro Pound, geez, it's at that big resistance. We talked about it briefly in the webinar yesterday on Daily FX, but man, I'm really tempted. If I didn't detest that pair so much, almost as much as Euro Swiss, I might be tempted to do something about it. But we'll take a look. So if there are no other questions on Kiwi Dollar, I do want to touch base on Euro Aussie, which was also highlighted on the Sunday update. So here's what we looked at with Euro Aus on Sunday. Okay, we talked about the fact that this thing responded to major key support 146.36, 146.64. Here's what Euro Aus looks like right now. Matt says got tuned up by Euro Pound Monday. Tread carefully, LOL. Wesley says testing my patience again. Yes. Are you talking, Wes, about Euro Aus or Euro Pound? Euro Pound's, it's like playing with dynamite for me. So I would like to see a little more clarity. It's at a major big resistance. We'll talk about that in a second. You're getting me all excited. Here's Euro Aus right now. It's right at that key support again after breaking this initial weekly opening range. At the end of the day, guys, with what Euro's doing on the pullback, this could wash out pretty dramatically. So I'm very cautious. I haven't taken anything on this as a disclaimer since the start of the week. We talked about the start of the week keeping an upside bias well above this region. While you would have gotten a decent long trade in overnight, you're pretty much playing with that major critical level again, and momentum isn't too encouraging. So I just wanted to highlight that we were coming into this support. I don't necessarily have a game plan. There's not necessarily a setup per se, but the next level down with a break here would be a longer-term trend line that comes in right around 45.35, and the 100% extension, comes in at 145.10. So keep those targets in view if we pop through the lows here. I don't know. But from the daily chart, this is certainly flirting with a pretty big level. It was encouraging how we reacted off this last week, and if you bring this into a close, or just mind the daily closes, it was a pretty nice rebound. Looked pretty clean. This secondary attempt, if we're able to close down at these levels, is certainly basically tempting a break of the monthly opening range lows. Okay, and that could really wash out dramatically towards that trendline support there. So Euro-Oz is back on the watch list, as it were. Don't necessarily look for a play. I would look to see if we break the Asia highs, if we do move higher here, and back through this pivot line, back through the the lower parallel here, it might be a decent reversal trade. But even then, you'd still need to clear the weekly highs to get this thing going. And then you'd be targeting 48.30 or thereabouts. So be on the lookout. I would like to see, ideal scenario, it holds right here and starts to move higher. But if it breaks those lows, sit on your hands and watch that thing drop. Yeah, Wes, he says he's talking about the Euro-Oz. So keep that in mind, man. I'm with you. I want this thing to turn higher. It's just, with the outlook that we posted yesterday on Euro Dollar, I just sat on my hands because Euro looked very precarious, specifically as it came off. That trendline resistance there was really sharp. And then the fact we closed black below the HDC here really had me aggressively looking lower. All right. He says, sure, I have faith. Wes, I'd rather you have a game plan. I mean, faith is important on a personal level, of course, but from a trading standpoint, hope is not a strategy, right? We want to stick with a game plan and make sure you have your stop in place. And that's why, guys, no matter what you do when you jump into a position, there should never really be a point where you're freaking out because we have our game plan. We have a well-defined stop, as we always stress. Capital preservation is paramount. And as long as you have a game plan set, you know what your risk is on the trade. Eileen emphatically agrees with that. Amen. All right, so that is Euro Oz. That was number 7. Let's jump really quick into dollar yen. We're making good time. I want to touch base on Aussie dollar. So it's going to be 8 and 9. And then we'll jump into your questions here. So here's what dollar yen looked like, again, early start in the week. Here's the Sunday update. Was the last time we saw dollar yen highlighted. Major key support. We highlighted a continued bull side, top side bias while above 100 spot 23, 100 spot 29. So the August low day close and the 100% extension. It's basically where we rebounded last week and also is backed very closely by basic trendline support off the lows. Okay, probably see it better on the daily chart. This is all from Sunday's update. Okay, so basically looking to stay constructive about right above there. Well, we came right back into it and we're testing that as support. Okay, there it is. Same level. Make or break here for dollar yen. Okay, momentum also has a trigger. Let me make this line a little bit easier to see. Momentum has basic trendline support also coming into play here. If we break below this level, risk for a pretty big washout, I think, again in dollar yen. On the near-term approach, here's what it looks like on the hourly. This is actually a 30-minute, and there's that key level being tested as support right now. Ideally, looking for long entries right here against the lows. I'm just very hesitant to fight this yen strength that we're seeing across the board, and I want to see near-term price action give us a little bit more of a return. Let me see what the near-term charts look here on dollar yen. All right, so you're seeing some divergence here in the 5-minute chart. Price action making a lower low, the oscillator making a higher low. That's encouraging. Here on the 1-minute chart, the pullback has started to find resistance between 60 and 40. That gives you the fact that the downside bias or the downside momentum has really started to wane. Here's the highs we made in Europe. Okay, you dropped below 60, you dropped below 40, 60 resistance, another probe below 40, and now we're holding between 40 and 60. That's telling you that the immediate downside bias is starting to wane. So I actually would really be interested in a long position from right here against the lows. Okay, now the initial target to the upside would still only be about 153, 154 here. You've seen a decent pivot at this region. So that would be your first sort of level off, and then followed by, probably a soft target for me right about something like this. Okay, and you're right shy of the highs that you made yesterday. But again, testing the weekly opening range low. You have a well-defined weekly opening range high at the weekly open, essentially 101. And I think this is going to be a decent play moving forward. So I'll be watching this one very closely. If we top the weekly open, look for a rally towards 101.45, and this is the level to clear. For me, in my mind, if we do clear that, that would be a reversal in dollar yen. So make or break level, clear-cut targets. We'll see if we can't get some momentum, giving us some conviction, try to fade this weakness. But, if we break any lower in dollar yen, sayonara. Questions on Japanese yen. And again, keep in mind Kuroda's on tap tomorrow night. All right, let's touch base real quick on Aussie. A very messy trade. Not really interested in even looking at it right now. But yeah, I just wanted to update you anyway. Here's what it looks like for Aussie dollar. And this is why for Aussie, if it pulls back, I think it might give us a decent play on Euro Oz to finally see that turn. But for Euro or for Aussie, here's what the daily chart looks like. Look, we probed through that trendline resistance again and failed. If we take a slope, copy of it, almost the same slope, okay? So keep that in mind. And momentum, not really giving us much encouragement that you're in the midst of some major, major breakout. Wes says, yes, Euro Aussie's messed up by the Aussie. I agree with you, man. We never got that pullback that we were looking for down into structural support. And the market's going to do what the market's going to do. At the end of the day, you're testing daily, longer-term structural resistance. So for me, I'm not trying to get long Aussie per se at these levels. I'd be looking for a pullback towards well, let me take that back. Here's that trend line that we were looking at last week. Actually, I haven't considered this here. September high day close, which was resistance. You got a decent pivot right here. Momentum looks pretty strong. We just came from really overbought readings. Yeah, you might see some more upside here, but yeah, I can't advocate getting long, at monthly highs essentially, or near monthly highs here. For me, it would need to be, I couldn't even tell you guys. I couldn't even tell you what I would do on the Aussie here. I got no interest. I'd be looking for a move lower to get long, but even from here, you're basically at support, so I wouldn't be surprised if this thing rallies right back into the HDC from here and then turns over. Do I want to necessarily be long? It's hard to advocate that at these levels. With that trend line right there, longer term, a lot of long wicks into this region, into these levels in general. So I just wanted to bring it to your attention, but I don't, again, very similar to what we were looking at earlier, I don't necessarily think there's a play here just yet. I know Jamie's a little bit more constructive on this. I think he's looking at down at 75.60, 75.72, which would be an area I would be interested in long exposure to. That's right here. Okay, but from these levels, I don't necessarily think there's a play for us yet. All right, so that's Aussie. Wish I had a little bit more conviction for you on that, on the Aussie crosses, but they are testing some critical levels here. Wes, any idea why Aussie is so strong? Yeah, Wes, it's because more buyers than sellers. Sorry to give you a fresh answer. I don't. From the fundy standpoint, again, if you look at the RBA, there's still expectations they're going to have to ease further. And not till next year, though, deep next year. Here's what overnight index swaps are pricing in as far as probability of cuts from the RBA. First, really surmountable expectation doesn't come in till July of next year. 51% chance that they'll cut interest rates by another 25 basis points. They're already pretty much at record lows here. So, I mean, from a monetary policy standpoint, yes, further easing is expecting. From the data standpoint, it hasn't been all that bad, actually. From Australia, it's been a little quiet lull from the data stream over the last week or so. But, yeah, I mean, we're in an uptrend, Wes. I'm not really too surprised that it's rallying. I'm surprised at the breadth of the rally, that this thing hasn't even taken a pullback and given us an opportunity to get long. We've been trying to get long essentially since this reversal, or not even a reversal, but an outside day that we made on the 15th. This was another outside day reversal. It took you right through the monthly open on the 19th. And then it's just been, we've had one down day since. You know what I mean? He says, yeah, exactly. I mean, you have to also keep in mind, Wes, that within the confines of this rally was what? The FOMC. And the shift in expectations for the path of interest rates really dropped the dollar. So, Aussie's already in an uptrend. You see a near-term breakout, and then here on the 23rd or the 21st, now you get all of a sudden FOMC fueling what is already an uptrend. So you have to look at it from a trading standpoint. Forget all the fundies and stuff, right? Wes, it's like a cascade effect. People who were short in here, closing out those short positions, produces a rebound. It breaks through resistance, and then you have fueled fundy shifts, which once that starts to filter in, starts to trigger all the guys who are trying to fade this rally. They get stopped out, jams into the highs. And I always kind of try to think about it from the trading standpoint. What are the transactions that are happening now? Are we getting people closing out short positions, or are we getting fresh long exposures? And that kind of sometimes will, I don't know, paint a clearer picture for me, Wes. So, I don't know, little food for thought there. Comwall says, silver and crude coming right up. Any other questions on Aussie before we move off? Kiwi is now clearer than Aussie. I agree with that. On the near-term approach, Wes, I agree with that. In fact, if you check out Jamie's update from last night, he had a really interesting chart on Aussie Kiwi, which you might want to check out from a 4-hour perspective. Also, testing a pretty big level here. Euro pound. Sushil, I did not do that. I apologize. Number 10, euro pound. Here it comes. I don't have an intraday setup for you, but I do want to highlight that major critical resistance that we talked about in the webinar yesterday. 87.09 into 87.39. A little bit larger of a range than you want to see per se for euro pound, but critical. 100% extension off the lows. Here are the reference points. 1, 2, 3. Okay, that gives you 87.39. And then you have a 618 retracement from the decline off the highs that you made back in 2008, post-crisis. Big region, huge region. Basic slope resistance off that 2008 crisis high as well, right in there. So look, I mean, I'm not a big fan of trading this pair. From a scalping standpoint, the ATR tends to be much smaller, and the obviously the pip value, because it's pound pips, larger. So it hurts more on a tighter stop, and with the same respect, you might not get those ranges that you want to play. So from a scalping standpoint, Sushil, for me personally, I don't really, often trade euro pound. That said, 87.09 was really big. Not to mention even that it was last month's high, right? Forget that. Just from a basis of a long-term Fibonacci standpoint, multi-year Fibonacci standpoint, and slope resistance. Note that we haven't closed above this slope once. In fact, if you bring this into a close, the line chart, sometimes that's as close as you're going to get. Now, do I want to blindly get bearish here? No. It's still in a pretty strong uptrend. But definitely the risk does stand for a little bit more of a near-term correction to the downside off this region. All right. Sushil, questions on euro pound? D, I do want to cover, was that you, D? Euro Kiwi. Next, that'll be number 11. Here's what Euro Key looks like. Let's take a peek. Again, haven't been following this trade, but let's see where she's at here. Okay, failure to close above 154.76, which was tagged near-term resistance. Confluence 236 retracement of decline. Basic slope resistance. Nice hold. Momentum. No divergence. Okay, let's see what the near-term chart looks like. Okay, now that we have a little bit more conviction of this being a high, I think we can work with this retracement near term. Highlights key support right here. Okay, I do like this slope. So let me just see what this looks like. Close enough. Okay. So a 38.2 of this range looks like it's been decent support. If you extend it off that swing low here, I know it's been a little messy, but if you take a copy of it or you extrapolate it off that swing low from here, you could see it catches the highs almost perfectly. So I do like working with this slope near term. It's the same slope. I haven't changed anything. Just working with the different median lines within that range. So with that sort of in focus, let me just adjust this. Okay, that actually makes it even a little cleaner. I don't necessarily want to stretch that anymore. I do want to see what this extension looks like. So on a topside stretch, that would be actually a really decent level because it matches up perfectly with those highs he made a couple weeks back, which lasted a good 3 weeks before it actually broke lower. That brings you 56.50, 56.48. It's constructive above 52.30, 52.28. And I just want to see where that... Oh, beautiful. The reversal close after the low was made for the year, that registered right there. The close comes in at 52.16, so just below this region. Might as well just tag it up. Where's my marker? There it goes. So key support here. And that would be for me bullish invalidation. Okay. Interim resistance, look at the weekly open. So right around this level right here where my cursor is. And on top of the weekly opening range, if we break the highs, let me just mark that up while we're at it. and the weekly open. Feel free to take a snapshot of that, D, for your consideration. Let me know if that helps on Euro Key. Interesting setup. Interesting setup. I'm looking for Euro support. Broadly still looking for Kiwi weakness. Kind of makes sense if we see some sort of near-term support. The only concern for me is that this thing still might see a drop just based on the Euro weakness, since we are sort of flirting with a break of support here. If Euro does continue down to slope support, or at least a 50 line here, that might perpetuate Euro Kiwi down to the bottom end of this range as well. And that's still a ways away from where we are right now. It's like over 100 pips, 130 pips. So from me, from a standpoint from a scalper or a near-term intraday trader, I hate that word, scalper, so let's stick with intraday. I still would be looking for further confirmation before trying to buy this. But I think we're on the right idea here. Might be too steep of a slope. I don't really like when the slope is that steep. So I don't want to put too much emphasis on it. But even from a Fibonacci standpoint, the reversal day close, the swing lows that you made there earlier in, well, this was the low for August, all coincide right here. So I'd be interested in either a move down into here for a buy or a break of the highs. And that, again, would be targeting that near-term topside objective. D says, yes, thank you. I can now place sensible stops on new shorts at 55.05. 55.05. You're basically looking at these highs here. If you're looking for a move lower, here's what I would say. Look at these swing highs ahead. Yeah, basically 55.05 I would say would be outside the range. I would probably tighten it up because if I do think if it breaches the weekly open, you might get a stretch into like 55.50 before it turns. But I'm not really looking to, I'd rather be looking to buy the dip, D. I'd rather be looking to buy the dip. So new stop at 54.50. Well, that's, I'm not sure what you're, oh, you're short already. I am already short now at 55.05. Okay, now I see what you're saying. Because if you're trying to initiate new positions from here, you're blowing my mind. I see what you're saying. Okay, new stop at 54.50. You had a nice entry on that, 55.05, 54.50. Yeah, the swing lows, sure. Let me zoom this in. 2 hours way too far out. Here's what I would say. And again, I don't want to necessarily shake you out of your position. Personally, from my standpoint, I would have it even closer. I basically have it against that swing high we just made. Just maybe higher, 54.30 or so. Just for a couple of different reasons. If you get a break of this high, I think you likely swing right back up towards the 618, and that's 54.70, and that would take you out and shave off another 20 pips of profit for no reason. So if you break the highs, I'd rather be out at 54.20 and let this thing rally. If you still like the short side, you might actually get another poke at it to drop into that 618. But if you do break that overnight high, just because of the severity of the pullback, you're likely to see a stab of 54.50. You know what I'm talking about, D? Does that make sense? And sometimes I catch myself doing that a lot. I'll say, you know what, put the stop against where, all right, this is going to be sort of the changing factor. But there's no point in me shaving off 20 pips of profit, in my humble opinion, just to kind of move it there, especially on a trade that you have already locked in, a good 100 pips on that. So targeting 52.50 looks okay-ish, D's asking. 52.50 I don't have as a target per se. Look, you have my targets right in front of you here, D. These are the targets I'd be looking at. So if you break these lows, I'd be looking for 53, 52.90 here. And then again, just look at previous price action. I don't really have much at 52.50, but that swing low there. So sure, you might find a bounce there, but I think the market would gravitate at that point for a tag of the 618 of the entire advance. And that would still take you into basic structural support. So this is another thing I would take a look at. Take a sliding parallel off that low. And that brings it in even closer to 52.30 either way. Or even to those lows you made right here, which again reflects the same slope. Okay? But nice trade. Nice trade. All right, so that is euro pound, euro kiwi. I think we got all the euros out of the way. Let's jump into the commodities. Where's Conwall? Conwall, this is for you, brother. Here's what crude looks like. No change on the levels there. Nice turn away, just ahead of that stab. Ideally, we would have seen a rally here to get us into the short again, but you didn't get it. So, market turned over pretty heavily. Momentum's in oversold condition. I'm looking lower. Really, it's not much to differentiate from what we've been following here in crude prices. Also, keep in mind, near-term support hasn't changed. Look at that pivot there at 44. What else can I say? We could be in a near-term consolidation. Bearish invalidation unchanged, still up here. And you still need to clear that 43, 42.90 level of support to get this thing going. Ultimately, I see crude moving lower, a little bit more of a longer-term correction before it finally sort of regains its footing. It's been pretty clean here. So no change there. It'd still be selling rallies. Short crude closed at 44.20. Or he says should close at 44.20. So, which is what, last week's low? So I would be looking, right around the 44 handle in general, Conwall, is what I'd be looking at. He says he's short from 45.66. Nice. So yeah, that's the first target. To be quite frank with you, I'm still really favoring this slope right here. Since, you didn't really make a stab into that region on the initial drop, but you did probe even below it on the second drop. So this would just be a soft target. If you have multiple positions on, I would take a little bit off here, then look for a drop into that slope line. It was a perfect tag here. So yes, I'd be looking for maybe a soft target, 44.20, 44, but then I'd be looking for that slope as the little bit more of a possibility to see a stronger rebound. Make sense? Keep in mind one thing, Conwall. This thing could rebound into the U.S. Open just because one thing is objective. Aside from what Boutros says, you just haven't broken the weekly opening range low yet. So from a basic opening range standpoint, the market opened on Sunday. We went into a low at 44.40. It rallied into a high early in the week. You test the weekly high, failed to even make a run at it. And again, we haven't really broken the weekly opening range low yet. So, watch 44.40. You could rebound off that and then finally break, but that's sort of the initial region to give us an objective bearish bias. All right. He says, yes, sir. Okay, awesome. Gold, no change on the gold outlook either. Still going to be a little bit more range bound. I do think now that we're pushing below that low day close again from way back here in July, that you could still see a pop lower. Again, constructive above 1355 near term. Major key resistance still 1350, 1355, this zone here. So just a quick update on that. I think you might see a little more back and fill specifically in gold here. And it could be a strong reactor heading into all these Fed commentary. So one of the things that you want to keep in mind as you get those commentary from all the voting members specifically, the vice chair, Mester, all these ones, you're going to want to keep that sort of front and center. Silver, I haven't looked at a silver chart in a while, to be quite honest with you, Conwall. Let me bring up a chart here. Again, I haven't checked this out in a couple of, feels like months now, so just give me a second. Let me scope this out. Also short in silver at 1934, your bias. Coming right up. Yeah, it looks like it's turning. Look, you're in a consolidation range still. That's your trigger for a little bit more of a sterner break to the downside, I think. Here's your monthly open. So here's the thing with this, Conwall. I would tell you to play this as a range until we finally clear this sort of consolidation. Here's your monthly open, served as support. We turned ahead of it actually, and here's resistance turning ahead of it, ahead of the weekly, ahead of the monthly, excuse me, opening range high. So that's lower highs, yeah, higher lows. That's consolidation. I don't want to stress this trend line, but I'm just going to put it here just for reference, okay? Oop. Too steep to work with and really rely on heavily, but this is the 30-minute chart. You're at support, Conwall. You're at support right here, man. Yeah, you're at support, okay? And I would keep that in focus just because you look at that swing low. I'm trying to get the cursor to pivot there, but it's not pivoting. But you get the picture, okay? That's the 618 retracement, slope support near term, and those swing lows. So the point being, if it breaks, look for an accelerated drop. Okay, look for an accelerated drop. That being said, into the U.S. Open, I wouldn't be surprised if this thing rallies. Your near-term bearish invalidation level, so the level of which you want to see hold for you to maintain your bias here, is right here. Slope resistance, the session highs that we made in what is this, Asia trade last night, and I think if you break above that, you're likely to see a little bit more of a topside rebound. But near term, I'd be working with this slope just as sort of a gauge for silver prices. All right. Hope that helps, Conwell. Kelly, we didn't go over dollar CAD. D, we are too late to go over dollar ZAR right now. I haven't covered dollar ZAR, so I don't have necessarily a setup for you there. Kelly, here's what dollar CAD looks like real quick. I do have to run, and we'll be back on board tomorrow, guys, obviously. But here's dollar CAD on the near term. I don't know what to do with this. I really don't know at all. I've been looking at this, looking for a pullback, just like in Aussie, to try to get long. It's just been ripping higher. I can't tell you guys to get long at the highs here. Trying to fade it. I don't necessarily have a level of resistance just yet. I would love to see this thing kind of try to test that 324 swing high here, which might be an area of which you could play a near-term pullback, but I don't have a play here. I don't have a play here. Kelly, now if you're already holding a long position and you're kind of holding that pat, I'd be pretty comfortable with this thing as long as it holds 32 support near term. Looking for that swing maybe a little bit higher towards the 33 handle, 32.95. If you're looking for a fresh position to get into, I don't think necessarily dollar CAD is going to be your best play from these levels. Price action is just too sporadic all over the place, and you're not really, it's just not really reacting as cleanly as we would like around these trend lines. So I think I'll sit pat on dollar CAD for now until we get a little bit more closer picture of near-term price action. That says thanks, keep missing an entry, so it is what it is. Exactly. I'm with you. I'm with you on dollar CAD. Trust me. It's been frustrating, but I think when that happens, we just shift our attention to where price action is clear. And I think if you look at the euro, pound, Kiwi, those are looking all a bit clearer to me. Even the dollar yen at this point, than necessarily trying to push dollar CAD around. All right. Eileen says, always great watching you put charts together from scratch. Cheers, Eileen. I do it for your benefit, so I hope that that helps. All right, guys, I'll wrap it up here. We will see you all bright and early tomorrow morning. Also, keep in mind, we do have Jamie's midweek strategy webinar tomorrow at 1 p.m. Eastern, so a quick reminder for that. Till then, best of luck trading, and I'll see you tomorrow. Cheers.